Hi, my name is Allan Madan. I'm a chartered accountant and a tax expert in the Toronto, Mississauga, and Oakville areas of Toronto, Canada. The topic of today's short video is 2011 new tax credits and deductions for individuals in Canada. It's very important that you watch this video so when it comes to preparing a personal tax return, you'll save a lot in tax. I'm going to first talk about the increases in existing tax credits from the 2010 to the 2011 taxation year. The first credit is the basic personal amount. It has been increased to $10,527. That means the first $10,527 of income that you earn is not subject to any income tax whatsoever. The second increase is in the Spousal Tax Credit to $10,527. If you have a low-income spouse or your spouse is not working, you can take advantage of this credit. Spouse for this credit means someone you're married to or you're in a common law relationship with. The third credit is the eligible dependent tax credit, which is increased in value to also $10,527. You can take advantage of this credit if you're a single parent, divorced, or separated and are supporting a child that lives with you. The fourth credit is the Child Tax Credit, which is increased to $2,131 for each child that resides with you and that is under 18 years of age. The fifth credit is the Age Credit, which has gone up in value to $6,537. The Age Credit is an automatic credit given to individuals that are 65 years or older. The Age Credit is reduced if your income is above a certain amount. The final credit that's gone up in value is the Caregiver Credit. This credit has a value of $4,282 and is meant for individuals who are supporting an elderly parent or grandparent. So what are the new credits that have come into play in the 2011 year? Let's go through those next. The first one, which has been widely advertised, is the Children's Arts Credit. This credit is available for monies paid for activity programs such as artistic, cultural, and recreational activities for your children who are under 16 years of age. The maximum amount is $500 per child. An example could be music lessons, dance classes, acting classes, etc. The Family Caregiver Credit is also a new credit that was introduced, but it won't start until 2012, so we're still 1 year away from realizing it. This credit has a value of $2,000 and is meant for individuals that are supporting an infirm dependent. Infirm meaning disabled. Also new for 2011 is the tuition credit for examination fees paid to a professional association or an educational institution. Many of you may have a professional designation and you had to write an exam in order to obtain that designation. Now, the examination fees are eligible for the tuition tax credit. If you study abroad, you can claim a tax credit for the tuition that you incurred while studying abroad. Previously, however, you would have to study abroad for at least 13 weeks to qualify for this credit. Now, you only have to study abroad for a period of 3 weeks, and the monies that you spent on tuition would qualify for the tax credit. They've closed a loophole for flow-through shares. Now, the CRA did this because they thought taxpayers were taking advantage of this, and it was far too great of an incentive. Flow-through shares are special types of shares that are issued in mining and exploration companies. If you purchase a flow-through share, you can deduct the full amount of the purchase, plus you can receive an investment tax credit. So what individuals were doing was as follows. They bought the flow-through shares, got a full write-off on their tax return, got a lucrative investment tax credit, but then they went around and donated those flow-through shares to a charity. And guess what? They got a donation credit. But what really offended the CRA is that because there was a loophole that allowed you to donate your shares without having to pay any tax on the gain, the CRA became mad about that. So they've closed that particular loophole. If you own flow-through shares now and you donate them to a charity, you will still get the donation tax credit, but you will have to pay capital gains tax on the gain resulting from the transfer from yourself to the registered charity. Something also new for 2011 is subdividing the Canada child tax benefit between both parents in the case of shared custody of a child. Previously, only one parent could receive the Canada child tax benefit in shared custody circumstances. I hope that you enjoyed watching this video. Please keep in tune for further videos to come. And I encourage you to visit my website, which is shown at the bottom of the screen, www.madanca.com. Also, see the link at the end of this video for my free report, 20 Tax Secrets on How to Beat the Tax Man. Go to my website, watch my video, and you'll be a lot wealthier. Thanks for watching. Have a great day.